With the Bretton Woods Accord, America rose to global dominance in 1944, and the dollar later became the world's reserve currency. The dollar was once the equivalent of gold, but that has since changed, and now that the world is in real trouble, I'm worried that the American empire is coming to an end. This is what Robert Kiyosaki said in an interview. The stock market has been on a roller coaster ride this year, and not in a good way. After reaching record highs in February, the S&P 500 and Nasdaq Composite have both taken a nosedive, with the former down 23% and the latter 31%. Make sure to stay with us as we break down Robert Kiyosaki's latest warning. Do consider liking and subscribing to our channel, and don't forget to push the bell icon to get notified of our latest videos. The prominent investor and author Robert Kiyosaki has been warning about the possibility of a market crash for several years. In his view, the current market conditions are ripe for a crash that will be unlike anything we've seen before. His concerns are based on a combination of factors, including high levels of debt, rising interest rates, and global economic instability. Kiyosaki criticized the Fed's move to raise interest rates, stating that it would lead to the downfall of the stocks, bonds, real estate, and the US dollar, while cautioning that the next financial crash would stem from the derivatives market, he said in a tweet on March 23rd. The author further claimed that Klaus Schwab, the founder of the World Economic Forum, influences top US financial leaders, insinuating that they are under his control and may act in his interests rather than those of the American people. Raising interest rates have the ability to lower the value of bonds that are already issued and cause big losses for bond holders. A slight increase in interest rates, which will make it more difficult for borrowers to repay their debt, can have a big effect on the economy. This could lead to defaults and insolvency, which could have an impact on the sector as a whole. When people fall behind on their payments or file for bankruptcy, it has an effect on their families, businesses, and neighborhoods. So it's crucial to follow Kiyosaki's advice regarding the increase in interest rates. Kiyosaki tweeted on Monday, March 28, warning, "National debt to go through the roof," and emphasizing that the dollar is about to implode. As of January 2023, the total national debt and the debt ceiling both stand at $31.4 trillion. The US government has run a deficit averaging nearly $1 trillion every year since 2001, meaning it spends that much more money than it receives in taxes and other revenue. To make up the difference, it has to borrow to continue to finance payments. Debt allows government and individuals to spend more money than they have, but it has also created significant risks. If interest rates rise or the economy slows down, it will become more difficult for borrowers to repay their debt, which could lead to defaults and bankruptcies. Robert Kiyosaki's warning about the levels of debt in the system being unsustainable is a serious concern that we cannot afford to ignore. It's not just a hypothetical fear that we can brush aside, but rather a real issue that has been brewing for several years. When debt levels are too high, it can lead to a decrease in economic growth, which could translate to a decrease in job opportunities, salaries, and overall economic stability. This is not a problem that affects just a few individuals, but rather the entire population. Using debt to prop up the market can create a false sense of security. It can be tempting to invest in the market when it appears to be performing well, but when the market is propped up by debt, it's important to be cautious. The reality is that when the debt cannot be repaid, it can lead to a significant correction on the market, which can be devastating for investors. Kiyosaki is also concerned about global economic instability. While the global economy has been growing for several years, there are still many risks that could derail this growth. These risks include trade disputes, political instability, and geopolitical tensions. If any of these risks materialize, it could lead to a sharp slowdown in global growth, which could in turn lead to a market crash. The author of Rich Dad Poor Dad has been warning us about the unsustainable policies of the Federal Reserve and the disconnection between the stock market and the real economy. According to him, the Federal Reserve's policies of keeping interest rates low and printing money are unsustainable and could lead to a significant downturn on the market. In addition, he contends that the stock market is no longer connected to the real economy, and that this disconnect could cause the market to experience a major correction as it adjusts to new economic conditions. The critique of the Federal Reserve's practices by Kiyosaki is not without merit. The Federal Reserve has been keeping interest rates low for several years now, which has led to increased borrowing and spending. In addition, the Federal Reserve has been printing money to buy bonds and other assets, which has led to an increase in the money supply. While these policies have helped to stimulate the economy and keep it afloat during tough times, they are not sustainable in the long term. The problem with keeping interest rates low for an extended period is that it can lead to inflation. When interest rates are low, people are more likely to borrow and spend money. This can lead to an increase in demand for goods and services, which can push prices up. Inflation can erode the value of money and make it more expensive for people to buy the things they need. It can also lead to a decrease in the purchasing power of their savings. Printing money can also have negative consequences. When the Federal Reserve prints money, it increases the money supply, which can lead to inflation. In addition, printing money can lead to a decrease in the value of the dollar. When the dollar is worth less, it can make it more expensive for people to buy imports, which can lead to a decrease in trade and economic growth. Kiyosaki's warning about the disconnection between the stock market and the real economy is also concerning. The stock market has been reaching all-time highs, even as the real economy has been struggling. This can create a false sense of security for investors, who may think that the good times will last forever. However, the stock market can be volatile and it can quickly adjust to economic realities. The problem with the disconnection between the stock market and the real economy is that it can lead to a significant correction. When the market adjusts to economic realities, it can lead to a decrease in stock prices, which can wipe out years of gains. This can be devastating for the average investor, who may have put their hard-earned money into the market in the hopes of securing their financial future. He also warned that economic growth is slowing and that this could impact the stock market. He's argued that investors should be prepared for a potential slowdown in the market. Kiyosaki has warned and criticized the practice of companies buying back their own stock. He's argued that this has propped up the market and that when this practice stops, the market could experience a significant correction. Kiyosaki has warned that the market is too dependent on tech stocks. He's argued that if these stocks were to decline significantly, it could lead to a broader correction in the market. He believes that political instability is a risk that could impact the market. He has argued that investors should be prepared for the potential impact of political developments on the market. Kiyosaki has argued that the market is due for a reset. He has warned that this could lead to a significant correction in the market, but that it could also create opportunities for investors who are prepared for the downturn. Unfortunately, we are in a global recession. Hang on, rough landing for the world. Bad news, bankruptcy, unemployment, homelessness soar. Retirement toast. Good news, bargains everywhere. Gold, silver, Bitcoin priceless, Kiyosaki tweeted. According to Robert Kiyosaki, the rough landing will result from factors such as rising bankruptcy, unemployment, and homelessness rates. His warning is not to be taken lightly. In fact, many experts share his concerns. The current bull market has been going on for over a decade now, and some believe it's long overdue for a correction. However, Kiyosaki also sees a silver lining, stating that bargains are everywhere in the forms of various assets. He suggests investing in gold, silver, and Bitcoin as valuable assets that could weather the economic storm. While it's impossible to predict exactly when a market crash will occur, Kiyosaki's warning serves as a reminder to be prepared for the worst. One of the biggest mistakes investors make is assuming that the good times will last forever. But history has shown us time and time again that market crashes are a natural part of the economic cycle. Those who are not prepared can suffer significant losses, while those who take steps to protect themselves can weather the storm and come out on top. Robert Kiyosaki's last warning about the coming market crash is a wake-up call for all of us. He has highlighted the precarious state of the global economy with high levels of debt, rising interest rates, and global economic instability, creating a perfect storm that could lead to a crash, unlike anything we've seen before. However, Kiyosaki has also offered hope and practical advice for those who are willing to take action now.